What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 15th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about why we may be set for a massive divergence between the stock market and cryptocurrencies, leading towards a spring rally in cryptocurrencies where Bitcoin can not only eventually revisit back to its all-time highs, but really kick off for the next move of the broader bull market. We're going to be diving into a whole range of different things, from technical patterns, data science analysis, market order flow, as well as some of the macro events going on. We've got lots of things to dive into, so let's not push it off any longer. Now, one thing I do want to ask you guys real quick, if you guys are interested in the crypto market and you think about the idea of getting paid in crypto is something you might be interested in, my startup Digifox is still going through its closed beta at the moment, and we're looking for a lot of testers, especially Android testers, who may want to participate. So if you're in the United States and you're considering the idea of maybe getting a portion or all of your salary in the form of cryptocurrencies, no matter where you work in the US, definitely consider checking out the tweet down below in the description, and you enter in for a chance to win $1,000 worth of Bitcoin. So thought I'd share that with you guys just in case. We definitely need a lot of you Android testers out there. Want to make sure we build a good experience for both operating systems. Anyways, let's go ahead and kick off the video, guys. So I want to start off here again, as we've talked about, in the sense of market price. Market price has been showcasing signs of confidence here, right? I don't want to be a dead horse. This is something we've talked about, the continuous higher lows over time. But I think there's a lot of other things right now that are starting to showcase that interesting sign of what we were focusing on earlier, this divergence between the equity markets and crypto. Because it's one thing that we've got the great price action that we've been seeing here, right? And this is a tweet from Butcher here, a guy over on Twitter. And I think it's a really interesting focus point on talking about accumulation and distribution patterns in the market, right? We can see here that there's very similar price trends here to what we had back here from May to July, and also here as well from really, I think, December here to where we are in March, right? This kind of sideways accumulation where basically large institutional investors who want to be able to build their positions and really ride the wave of the market, they don't want to be the spread on the order book effectively, right? They want to fill in their positions as much as possible at a low range. So they're sending in those limit orders during the liquidations, the panic selling events. They're getting the orders filled and getting buckled in for the next ride to the upside. That's what they want to do. And that's exactly what we've been seeing here in the sense of the trend. And now all we have to do really is see an exit out of this sideways channel with the higher lows and higher highs. And the question is, can we really get there? Well, one thing that I think is really important to focus on here, taking a look at our partner here, Bookmap, is that right now the market order flow is starting to showcase signs that it's ready to move higher. Big time. I mean, you've already got here generally a stronger order book here for the bulls. You've got over the general estimated price range here we're looking at here, kind of over the next couple $1,000s in each direction. We can see that there are more bids than asks on the order book, more support coming in for Bitcoin. And on top of that as well, no real substantial ranges of resistance here. Major limited orders on the ask side of the order book that want to get filled. And if that all wasn't enough, the biggest dynamic here that we need to focus on is the cumulative volume delta, the CVD, which we can see here in the bottom right-hand corner. And over time, that CVD has continued to climb higher here and maintain its momentum. This is a sign here that the market order flow is getting more and more eager over the past couple of days. They are not waiting around to get their limit orders filled anymore. And if there's enough of that excitement within the CVD and the market order buy side pressure, that's what's going to squeeze through those remaining limit orders on the asks, or the potential sellers on the market waiting for a certain price. And once you clear through that, there's not as much resistance where price can really start to leapfrog higher. And there's a bit of FOMO here where the market order flow just picks up more and more and more. And that's exactly how we exit accumulation patterns. It's very similar to what happened, whether it was the mid-cycle correction we had back in May and July, or during bear markets as well, back in 2018. When, for example, in December 2018, Bitcoin's price had really been sitting sideways for a long period of time. So we go back here throughout history. And what happens is, again, you're getting these signs here of higher lows, consistent resistance, and then pop, you get a major move here, up 18.45%. And the market, as you can see here, has enough market demand, even though there's some people selling, right, where you're still establishing those higher lows, those higher highs, and boom, another trend higher, and it just keeps on going and going. these are the kind of signs we want to look out for here when we're analyzing Bitcoin's price. And I know it's quiet right now, but it's important not to lose sight of the fact that when we start to see these signs, things are going to start moving very quickly. So that's why, again, during this period of time, I've been talking about not being fearful, keeping in tune with the long-term trend, and making sure you've got your positions. Now, I want to go ahead, and again, we'll continue to go into this talk about equities, which is our main focus point here. But I wanted to take a look here at another model we discussed, the Mayer multiple, right? Still playing intact with how it played out the last couple of times here. We could see back here, for example, in December 2019 and the March 2020 correction, right? We got the same exact kind of price action here, dipping below the 0.8 oscillator here, 0.8 metric oscillator here for the Mayer multiple, right? And again, we did the exact same thing back here during the bottom here of the bear market. So this indicator, this data science model, has played out to be significantly important here. And again, we're already hovering around that 0.8 oscillator, even having a couple of tests down below it. So I think that, again, it's just a matter of time here, right? You don't really see a lot of sell side pressure when we get below the 200-day moving average, especially during under the 0.8 oscillator, the 200-day. Right? And this has been a long time tested model in the space that's growing more and more relevant here in the sense of history, right? It's getting less exacerbated and on both the rallies and the sell sides, and market investors are watching when price gets to a point where the Mayer multiple oscillator is getting above these overbought or oversold ranges. Now, one thing that was tweeted out by one of my good friends, Patrick Laurie, was this tweet here from South Korea's incoming president. And I think this is one of the few kind of macro catalysts that I actually would say has a lot of significance in the sense of government policy over crypto. A lot of people don't know how big of a role South Korea plays in the crypto space, how important it is culturally in South Korea, and how wide of a range of investors there are in South Korea who are fully in sync with the crypto market. And to be honest, some of the speculative nature that can come with it in the sense of the altcoin space and new projects. But the major thing we need to understand here is when we're talking about capital inflows and outflows, as we focus about on, when we take a look at Bookmap like we did earlier, you can see here that we've got some really interesting signs here that capital flow in South Korea, where there is a lot of capital allocation ready to go to crypto, is going to have the safe haven in South Korea to be able to continue investing. You can see here that they're going to allow for initial coin offerings or ICOs as part of the broader crypto pledges that they made. And on top of that as well, you're able to make up to 50 million won or $40,000 without imposing taxes on cryptocurrency gains. This is incredibly bullish news here, right? And whether you think it's the right thing to do or not, if you like ICOs or not, it doesn't matter. The major key point here that I want to drive here is that this is going to lead towards an influx of liquidity flow when these policies are enacted, when these promises are made, right? And it seems like people are quite confident that this is going to happen. Again, we'll have to see if it happens, right? But I think it's, again, something we need to focus on here when we're talking about the inflows and outflows of the market. Having South Korea's government, rather than being overtly regulatory and applying pressure on the market, and instead applying beneficial policies to the space, that is going to likely drive up the entire cryptocurrency space, or at least it's going to serve as a positive element. Whereas on the other end here, when we've got in the United States, the Federal Reserve coming out and stating that they're, again, we don't have any official comments yet. It's going to be happening likely sometime this afternoon. During the FOMC meeting, the U.S. is more likely than not to still stick to its guns of increasing interest rates by 0.25 basis points, right? Not 2.5%, not anything eccentric, but just 0.25 basis points, a quarter of a percentage. Fed's done this before in the past, and I wouldn't be surprised if they ended up actually doing it now because of the rates of inflation that we're seeing in the economy. But if the Federal Reserve really backs down from raising interest rates here, that could be a really worrisome sign for equities. I think more than anything, it would actually be a sign of weakness in this case, of concern around equities and the broader asset markets. But I digress here. We can see here that even though the futures, and that's what I want to emphasize here, no matter what happens here, if people are concerned about the Fed rate hike or whatever, we can see here that if we actually take a look at the BTC NASDAQ ratio, over the past couple of hours, the last day or so, we've continued to see the ratio pop back up here, right? And this is again taking Bitcoin, dividing the NASDAQ 100. If you take a look at the NASDAQ 100, which we can pull up here, you're gonna find a really interesting trend here, right? We can see that the NASDAQ 100 is rolling back over again. It looks like when the market's ready to open that this is just going to continue collapsing lower here, to be completely frank with you guys. And look, I've got positions in equities. I'm not trying to be biased in this case and buy a discount. No, I mean, I've got positions in some various equities, but I'm not exposed to major technology companies. I'm not exposed to the risk plays. I'm exposed to commodity plays, right? And uranium stocks. Right? We've been bullish on this for a long time, waiting for this commodity rotation, and it's paying off now. Whereas the broader equity market is starting to feel a lot of pain now. And I think we've, again, got a chance here to really come down towards a lower price band than where we're at right now in these companies, especially considering where we were back here at the beginning of the pandemic, where we went to during the peak sell-off, and where we are now. We've still got lots of room to potentially decline here in equities, in my opinion. And I think that, again, seeing the resilience here since back here in January, the higher lows that Bitcoin is making against the NASDAQ, really, if you want to look at it this way, kind of an ascending channel here, right? We're continuing to make kind of higher highs generally and higher lows for the more significant time frame. And that is giving us the opportunity here to be able to start trending higher, retest this line of descending resistance, break above it, make it new support here, right? Accumulate sideways and then pop higher. And that's exactly what you want to see here for Bitcoin. You want to see that divergence between the two, because all the while equity markets are panicking at the macro environment, they're panicking at the Fed potentially tightening. All these things are starting to weigh in on the broader equity markets, and also just generally the global uncertainty right now with inflation and what's going on in Ukraine. Putting all of that into consideration, Bitcoin is factoring in those same things, and it doesn't seem to be selling off whatsoever. If it's a high-risk asset like everyone has been saying it is, then we should be seeing Bitcoin dumping right now. We should be seeing people mass exodus from crypto, and we're not seeing that right now. We're just simply not. And that's an incredibly great sign. To see instead the price is holding up and that the market order flow is picking up and that the limits on the order book are heavier than the asks, that's your telltale sign that things are about to get wild pretty soon. All we need is that catalyst. All we need is that liquidity surge. All we need is that breaking point through those remaining asks on the order book, and things just start to rip higher. And the market order flow picks up bigger and bigger. The momentum starts piling in. It's how it's played out in history, and it's likely how it's going to play out this time around. I like to bet on history, right? Now, I want to go ahead, and even though we've kind of dove into these charts here, I want to go ahead and take a look real quick at one important sponsor for today's video. Now, if you guys are more like myself and you're focused on the long term when it comes to investing in cryptocurrencies, or you're investing in those broader cycles and your crypto is sitting idly, I'd recommend in this case that it's best to find a way to get some kind of yield if you're willing to understand, in this case, the risks associated. And one of the platforms that I really like here, that I've been a big fan of for a long time here on the channel, is our partner Celsius. So they're today's sponsor for the video. Now, for those of you who don't know Celsius, or Celsius's founder, Alex Majinsky, we've had on the channel many times. Celsius is a yield-bearing platform in the cryptocurrency space where you can put your crypto assets to work, getting really nice, solid APY or returns on your cryptocurrency assets passively and idly. So we can see here, for example, that if you've got stable coins in the market, you can start to earn anywhere from around 7 to 9% interest, whether you're earning in the actual native currency or you're earning in CEL token. And along with that as well, you can start to earn on your cryptocurrency assets out there. So we can see here for some of the leading cryptocurrencies, we've got all your favorite altcoins in this case, Wrap Bitcoin, BTC, where you can start to get a lot of great interest on those cryptocurrencies. One thing that I love about Celsius is that they always focus in this case on making sure that for the smaller users in this case, that you're able to get a really solid APY. So for example, you can see here on the first Bitcoin, you get up to 5%. On all other BTC, you get 1.5%, right? So the first Bitcoin's really getting a lot of value here being deposited on the platform. And that goes for some other different types of assets as well throughout the platform. And on top of that, you've also got the ability to swap within Celsius. So Whether you're wanting to buy crypto through the fiat on-ramp capabilities or make swaps from one crypto asset to another, Celsius has some really great offerings. They're really low fees for the on-ramp. And on top of that as well, when you want to swap, you can pay 0 gas fees, 0 swap fees, and get the best available market rate that Celsius can provide you. And I think that's really cool because it's starting to make Celsius more of an all-in-one application as time progressed. So if you guys are interested, check out the link down below in the description. It's a great way to support the channel. And I digress. Guys, I want to go ahead and focus on one last thing here when we're closing up on this topic here for the NASDAQ. Okay. Even though the markets here are starting to really roll over, I know it's got some people concerned here, right? I think this is the shining moment where crypto is really going to start picking up here, especially once most of the weakness here is really dragged out of equities, when we see a rebound here over time. And I think that in the next coming days and weeks, we are going to see that bottom in equities. I think that we are going to eventually get down to this corrective range where equities are going to be at a discount. When that spring up comes in the market, I expect the divergence of crypto and equities to grow even wider. And that's the key point I want to talk about. While crypto is holding neutral now and accumulating sideways and showing this kind of silent strength that most people aren't focusing on, but institutions most certainly are, as equities are collapsing, when liquidity comes flowing back into assets, that's likely going to be the spring up moment. That's an important thing to know about, right? Not to per se say it's going to be overnight or it's going to start tomorrow, right? We're on the idea that we're going to see something here going into spring. It could be later here in March, could be early April. But the fact of the matter is that we're seeing the strong signs right now, and it's important not to lose sight of those signs, right? And again, if things start to change, if we start to roll over in crypto markets, and the fear really starts to set in, then who knows, things might be different and we might take more of a bearish take. But for now, the strength is there. Things haven't gotten worse since kind of the peak fear at the start of January. Things are getting better, right? And now we're just waiting for that trend to kick off. And it's all a matter of being patient, because in markets, patience, in most cases, more than not, will likely pay. And we want to get paid, folks. Anyways, everyone, I hope you all are having a fantastic day wherever you are. If you like this video, consider dropping a like, consider subscribing, hitting the bell icon. Always love hearing from you guys down below in the comments, so get a conversation going whether you agree or disagree. But I digress. I hope you all have a fantastic day wherever you are, and I'll see you all in the next video. Take care, everyone.